Thank you for being here today, David.
Pleasure to be here. Thanks for having me.
Awesome. So, could you tell us about yourself and your career?
Well, I've been in the business for 35 years. I grew up in the mining industry. My father founded Avino. I worked in the mine as a teenager. I worked in Nevada. We had another company there. What else? I worked on the floor of the Canadian Stock Exchange in Vancouver in the 80s. In the summers between school and then in the brokerage industry for several years. Then I joined my father in the 90s, did investor relations with him on various companies, and then in the 2000s became officer, director, and president of Avino. And it's got a long track record, so we reopened the mine, and we're doing great now. Thanks.
Perfect. So, could you, in your own words, summarize Q2 for Avino?
Q2, okay. Let's see, Q2. Where should I start? I mean, we had robust revenue, 21.8 million in revenue, representing a 47% increase over the comparable quarter the year prior. Profits, 2.9 million, 2 cents a share. Operating margins were good. 10.2 million and represented 118% increase from the year prior. Strong EBITDA, 7.4 million, up 118%. Improved cash cost per ounce, $15.11. And all-in sustaining was 20.93. So we're very competitive and we're making money. And then index inclusion, the S&P TSX Global Mining Index, we got it included in that. So those are the main highlights of Q2.
Could you remind everyone what's the guidance for 2025 production guidance and how are you tracking it?
Between 2.5 to 2.8 million ounces of silver equivalent, and we're tracking well within that range. We don't expect any surprises. So that's where we're at.
So let's speak about first of all the index, the two indices that you have been included in. And one was S&P and TSX Global Mining Index, as you said. What does this mean for liquidity and institutional ownership?
Oh, it's huge. Look at the volume. I mean, we're trading millions of shares a day on the NYSE. Even on the TSX, it's picking up substantially, but our primary volume is in the US on the NYSE American. Yeah, I mean, we got it included in the S&P TSX, as I mentioned. Solactive Global Silver Miners Index, and the NASDAQ Metals Focus Silver Miners Index. So these have all really helped. We're trading 4, 5, 6 million shares a day. So it's very liquid. And the one outstanding one is the GDXJ, which we qualify for. So we may get in when they rebalance next time.
So in all, is there any other silver or gold index that you currently aren't in that could potentially be up for the cards?
The GDXJ and then the GDX, which is a bigger one, but the GDXJ is the next big one. And you can see our, I don't want to jump around, but our institutional holdings have jumped up substantially since this has happened. We're up to 20% institutionally held right now.
Nathan, thank you for being here today.
Thank you for having me.
So could you tell us about yourself and your career?
Where to begin? So I guess I've been in the mining finance industry for, I guess, coming up on 15 years now. Started at one of the big 4 public practice firms at Deloitte for a number of years. Got involved in mining right away. Most of my clients were either producers or royalty clients, either in development and production stage. So I got to do a bit of travel as well too. All over the world. Went to West Africa a number of times. I went to Latin America, North America, all the above. And then after earning my stripes there for a little bit, I joined Avino, and I've been there for about almost 9 years now, and I have been the CFO for the last on a permanent basis for the last 5.5. So lots of experience in the mining industry, and we've got a number of other transactions we've done within our group that have worked out quite well for shareholders and everyone involved. So looking to build on that with Avino.
Could you summarize Avino's capital structure with regards to common shares, options, warrants, etc.?
So we have about 150 million shares outstanding at this time, and that's without any warrants outstanding. And then there's about 10 million of options and RSUs that would make our bring the fully diluted count up to 160 million shares. But yeah, again, no warrants outstanding or anything like that.
And could you summarize your financial position?
So it's very, very strong compared to where we were even just a year ago or longer than that. We closed the second quarter with about $38 million in cash. And now that we've completed which I'm sure we'll talk about a bit later, the royalty transaction, which had an upfront payment involved, we're actually right around the same level for cash. Even after making that payment. And then we've got about 30 million in working capital as we've taken on a $8.25 million or $8.75 million 12-month liability as part of that deal, which was the contingent payment we issued as part of the Preciosa acquisition. So working capital has come down to about $30 million.
Could you summarize Q2, give us the key figures on production, cash cost, all-in sustaining cost, operating and free cash flow?
Sure thing. So we've been on the production side, we've been consistently between 600 and 700,000 silver equivalent ounces, which puts us right in the middle of our guidance range. And that's kind of where we came in for the second quarter as well as the first. On the cost side, cash costs were $15.11, and all-in costs were just under $21 per ounce. So compared to current metal prices, obviously very profitable. And then operating cash flow from the Avino mine and over, I guess, including corporate, was about $8.5 million. And then free cash flow for the whole company was $4.5 million. But then, if we consider backing out La Preciosa development and site costs, it was about $6.5 million. So Avino is making a lot of money right now and more than offsetting what we're spending at both sites.
Perfect. So the throughput increased in Q2. It went from in Q1 it was 1,865 tons per day to 2,100 tons per day, which is quite good because the nameplate capacity is 2,400, but you always have 1 day off for maintenance per week. So what do you attribute the increase to?
Yeah, so we can actually, it's about, the full capacity is about 2,600 depending on the roughness of the material. But yeah, like you said, we run 6 days a week. So we were pretty much maxed out at that 2,200, 6 days, 2,200 per day over 7 days, which is 2,600, 2,500 over 6 days. I think we're expecting to continue on that rate. I'd say with La Preciosa, the ore will be a little bit softer compared to Avino. So there's a chance for some smaller increases as La Preciosa comes in. But until we do a mill expansion, that's probably what we're looking at for the next few quarters.
So would you say that you will be able to keep, above 2,000 tons per day, up to 2,100 tons per day? That's sort of the run rate going forward?
Yeah, that's our goal. I think the goal when we set out the year in our budget was about 180 to 185,000 tons per quarter, so about 740,000 tons per quarter or tons per year. And so 190 in Q2 was slightly above budget. Having said that, we've done a lot to improve mill availability. We've really, given our working capital and cash position, we can make sure we pre-order a lot more so it's available on site, right, for if something does happen, and have a lot more redundancy set up. And we've set up an updated maintenance schedule on the mill too. So that's both of those have helped quite a bit with mill availability.
The metal grades in this quarter were generally down. What was this a consequence of mine sequencing, or are there any other reason for it?
Mine sequencing, no, that's right. We, because of the system and the way Avino is at the ET area where we're mining now, it's bulk tonnage. The vein was our 40, 50 meters wide in some spots. To go out of sequence to chase a bit of grade doesn't really make sense. So we will always we'll kind of follow our long-term mine sequence. And sometimes that puts us in a low-grade area for a month or two. And then sometimes, we've seen that to the positive as well, too. We've had super high gold and copper grades. So yeah, it's really just mine sequencing.
What grade profile should we expect from the Avino wine going forward? If we just talk Avino, not La Preciosa.
Yeah. So I mean, if you look at kind of the previous number of quarters and take an average, I think that's pretty standard. And if some of our analyst reports are available, we've been pretty good at helping them model for medium long-term grade, and our resource reports are fairly updated. I think, yeah, an average of probably the last 4 quarters is pretty standard to where we expect to be. I think this quarter copper was down slightly, which is generally the one that can drive a decrease in some recoveries. So we do expect to have slightly elevated backup copper grades when like we had in previous quarters.
Next, from grades to recoveries. So your gold recoveries have improved somewhat and are now around 75% compared to 70% if you compare it to the first half of last year. What has led to the improvement of the gold recoveries?
There's a couple factors. I mean, a little bit of it is grade, but we also have these gravity concentrators that recover a lot more free gold, and so those, I think, last year and in previous years, they weren't fully operational, just either due to capital constraints or lead time on items. Whereas now all 4 are running, and we're producing a lot of gold gravity concentrate, which obviously helps our recoveries. And so that should continue moving forward. We should see that stay up in the low to mid 70% range.
So cash cost also, they were up by $1 per silver equivalent ounce this quarter. Was this a consequence of slightly lower grades? And how was the cash cost per ton in Q2 compared to Q1?
Yeah, that's partially accurate, I'd say. Some of it was just due to, obviously, we processed a lot more tons, but then didn't sell or produce that many more ounces, again, partially due to some of the lower grade in the mine sequence. So that did have a bit of an impact, as well as some minor inventory movements in concentrate in the quarter. Obviously, on the per ounce basis, we do per ounce sold, so that does capture inventory movements. Whereas for tons processed, I mean, we were bang on Q1 to Q2, right around $52, $51 cash cost. And that's been kind of where we've been targeting, and it's actually slightly under our budget, which is great. But that's kind of what we've been targeting for the rest of the year as well.
And that is $51, $52 per ton. That includes
$52 per ton. So that's mining, milling, indirect costs at site, royalties. That includes most of it. Yeah. I don't think that's not including corporate, but I think once you add it all in and sustaining capital, I think our all-in cost per ton average is around in the $70, $75. It's fairly low.
That is very low, to be honest.
Yes. Yeah, it's very low for an underground mine.
So let's speak about your capital budget for this year. 13 to 18 million, what was you guided for? How are you tracking that?
Yeah, so we're tracking fairly well. I think as of July, we had spent about 9 million. But that has included some additional exploration drilling at La Preciosa that wasn't initially budgeted, but obviously with the improved capital position, we wanted to put some excitement out there and confirm some holes. So yeah, we're right on track to be in that range.
Perfect. So drilling success at La Preciosa. So you don't expect to spend, I mean, you guided max $2 million.
Yeah.
Are you expecting to spend more to that on exploration?
We're going to spend more than that. And again, that's back to the previous question. That's why there's a range of 13 to 18. I think we'll probably end up higher end of that range because of additional exploration spend. Yeah, we've added, well, initially we had planned really just a bunch of deep holes at Avino and some regional exploration at La Preciosa. But now we've got 2 drills going over at Avino. And 1 drill at La Preciosa with the idea of maybe adding another one even. So I would say, yeah, we're probably going to spend a bit more than $2 million.
So could you give us the status of the development progress at La Preciosa?
Oh, yeah, it's going along great. I was just there a week ago. Had a group of investors, and we walked down the ramp, the main ramp, the initial ramp, and they intersected the Abundancia vein while we were there, and since over the weekend they hit La Gloria. So we've hit the targets. They're going to drift past La Gloria so they can set up pumping stations. And then prior to Abundancia, they're going to start the decline ramp. So we'll have those areas all happening at the same time, and mining development on the veins in both direction at that level. And then the ramp will go down and will create other levels. But we will be able to start pulling out some development ore very quickly.
So how much ore do you expect to process from La Preciosa this year?
About 30,000 tons.
Do you have any expectation on next year?
Next year is going to be a breakout year for the company. So we're expecting a big jump. So as I mentioned, 2.5 to 2.8 million ounces of silver equivalent. We're expecting to be up over 3.5 next year. And that's from La Preciosa alone. That's no mill expansion. That's grade contribution. So grade is king, and it's high grade over at La Preciosa. That's a big jump, like 35% in our output with not a lot of capital.
Could you remind everyone, how do you expect the throughput from La Preciosa to change over the coming quarters? And what will it be when do you expect it to be fully ramped up?
Yeah, it's interesting. It's hard to say like fully ramped up because obviously our mill is, being split between Avino and La Preciosa, and then we're talking about expanding the mill as well too. I'd say for the first couple quarters, the goal is to be running at 400 or 500 tons per day sometime next year, so that we can feed both the smaller circuits at Avino, which would be around 400, 450 tons per day. We think we should be able to do that within the year. That shouldn't be too much of an issue. I think we just recently actually intercepted both the Abundancia and the Gloria vein in our development portal. So now we're actually ramping down and creating the additional levels to start mining. So we do expect that we should be able to pull ore out that can make its way to the mill in the coming month or two.
So how will then the production and cost profile change ballpark once La Preciosa is fully ramped up?
Yeah, I think the first initial, months and quarters will be probably, higher cost as we're going to be into some development ore, and obviously that's all gets included in there. But then as we settle into kind of that 400, 500 tons per day rate, we do expect cost to come down a little bit. On a per ounce basis for sure. Per ton, it's going to be more expensive than mining at Avino, because we also have to truck it over to the mill, which is an extra, 20, 25 kilometers of haulage. But having said that, we do expect it to be competitive, and overall, once that ore is making its way through the mill, we do expect it to have a positive impact on per ounce figures.
So let's talk about exploration. You recently reported 4 holes from La Preciosa that were drilled to twin some historic or previous holes. You intersected several high-grade intercepts. Highlight intercept was 1,638 grams per ton silver and almost 2 grams per ton gold over 8 meters, give or take, through thickness. Could you explain why did you twin the holes and what have you learned from them?
For continuity, we want to validate what we're about to mine. And, we've inspected what we could of the drill core from the previous owners, but most of the intercepts are gone because they've done so many studies. So they've been sampled and resampled. So we wanted confirmation. And what happened? We hit bonanza grades and wider widths than what we previously understood. Now veins pinch and swell, and there's nugget effects, and you're gonna encounter these things. But it was really nice to see that these the grades are much higher than what's in our resource. Our published resource, the average grade is 200 grams. So what does this tell you? And when you think about what the previous operators were trying to do, they weren't planning on dissecting veins. They were planning an open pit. So they weren't spending a lot of time drilling the veins off, grid drilling them like we would, because we're planning to just mine those. They're planning to take everything. So it created opportunity, holes in the information. We're just plugging them. We just want confirmation. And it's turning out to be better than what we've reported from these initial holes. Ultimately, when we mine it, that will be the ultimate truth. But the indications are it's going to be much higher grade than what we've reported. And the market likes that. The market sees that. And if you go back to when Orco owned it in the mid 2000s to 2013 and look at their news releases, there's all kinds of kilogram hits in there. It's not random. There's quite a bit, actually. So the market is really excited about that because we won't have as much dilution as you get when you open pit mine. We're going to go in and just dissect the veins. So that means that higher grade material will go through our mill, and that'll increase our output.
So where are you following up then this year in terms of drilling? Do you have a rig turning right now?
We have 3 drills turning. So 1 at La Preciosa and 2 at Avino. We're going to drill as many holes as we can get in by the end of October because that's our cutoff date. And then we evaluate all the results, and we're planning a new reserve and resources report in Q1 next year.
Speaking of which, so you're planning on releasing reserves?
It'll be our maiden reserve. Although we have reserves at the Oxide Tailings Project, we've never published reserves because you need a feasibility study. That's an economic study. That was done in 1969 when my father acquired the property. So it's complete, and the mine's operated for 27 years, and then it closed in 2001. Then we reopened it. So it's out of date. And so when I reopened the mine, I didn't need a feasibility study. I had common sense, and I had the people around that believed in the project, the engineers and geologists that lived there, right? So I rehired them, and we reopened the mine. So under National Instrument 4311, Canadian reporting standards, in order to be able to publish reserves without a feasibility study, you need 3 years of 30 million in revenue, or 90 million, to establish, the costs and the economics. It's better than a desktop study. It's actual. So we've achieved that. So now we qualify. So we're going to come out with that. So we thought, well, let's do some more drilling. We got money now. So we stepped up our exploration program because we want to have as much knowledge going into this report as possible, because then everyone's asking, would you consider an expansion, at some point? I mean, we have a growth plan, a 5-year growth plan, but now with deeper pockets, we're considering reimagining the current operation as it stands now. So we wanted to drill off the obvious areas.
So essentially, reserves Q1 this year. Do you expect any? I mean, you already have a mineral resource inventory. Do you expect any major surprises or differences in the reserves?
I think the surprise will be the quantity of reserves, because initially a maiden reserve is quite light, but because it's well established, we think it's going to be substantial and the market's going to like it. So, but I'm not going to guess to what that is. I mean, if you look at Avino, the structure of it, it's well defined. We've got all these levels, so it's blocked out on 4 sides. So all of the information is well defined. So a lot of that will make it into reserves. Some of the stuff on the perimeter that's not well defined will be a lower level reserve. But we're thinking the reserve should be significant.
Also, when you're mining La Preciosa, as it is nuggety, how are you making sure that you don't miss the ultra high grade portions of it?
How do we make sure? I mean, we take out the whole vein.
How do you mine it, essentially?
Well, there's going to be different methods. It depends on the width. So the wider, the more mechanized mining you can do, and it's more efficient. You can use bigger equipment. You can pull out more material. If it's narrower, then it's called shrinkage stoping. It's more expensive because it's more labor intensive. They're going through narrow areas, but 8 meters are what we just announced. We can mine that with mechanized machinery using jumbos and scoop trams and pull that out. So, and it's well defined. It's white vein quartz. So you're not taking a lot of wall rock around that, which would dilute the grade. So we've got that under control because we've been there mining narrow vein mines for a long time. So we got the expertise.
And could you give some more color on what you're drilling for and drilling out at Elena Tolosa or Avino, the Avino mine.
Oh, at Avino? So we've picked back up drilling below level 17 and up closer along the fault. There's a structural controlling fault to the west that was ignored for decades because just above that is the tailings. So you don't want to be mining below wet sand, or that could collapse. But because we've decommissioned it and it's dried out, it's safe. So now we can be blasting below it. So there's all this opportunity below the tailings that have never been touched before. So we're excited about that. But below level 17, we haven't found the bottom of the mine yet. It's still open. And it's very interesting because we brought in structural geologists, a world-renowned structural geologist, Jeff Hedenquist out of Ottawa, Tony Starling out of UK, ex-Newmont. And these guys help figure out the structures because the mineralization is structurally controlled. You have offsetting faults, and in between the rock breaks up. And then the mineralized solutions come up over millions of years. They look for the weakest resistance to the surface. So where there's openings that goes up in there. So they form veins. And so we've got dozens and dozens. I think there's 50 veins on the property and a bunch unnamed. There's so much potential there. But we all know that the mineralization came from the core of the earth. It didn't fall from the sky. And where's the intrusive body? Where did it come from? That's what we're trying to understand. That's what we're chasing down at depth. So we don't know. Is there more mineralization? We've seen indications at other mines. La Colorado, Pan American Silver, Cosamine of Capstone. They've turned out to be like giant skarns or porphyries at depth. So I'm not suggesting we're going to find that. It's just a possibility that there could be a lot more at depth. So it's exciting for us. That's why I'm smiling, because we don't know. We're drilling. It's the most exciting time. We've got 3 drills going, and we're just adding value.
So the royalty buyback, you bought back all royalties on La Preciosa. Could you explain the deal terms?
Yeah, so we've been working on this for a little bit. Obviously, it's very rare that the operator of the mine actually has the chance to buy back the royalties. So we jumped on that opportunity, of course. So it was a fairly competitive process. There were other royalty companies involved, and obviously can't get into too much detail there. But we know that there were others in our range, or if not higher. But obviously, as the operator, it's a lot less technical risk for whoever's selling for us. So that was pretty positive and allowed us to kind of get in there and make sure we were number one choice. So we paid for the royalties. So there was 2 royalties on the property, 2 material royalties. So there's the one on the Gloria and Abundancia veins, 1.25%, which are the ones that we're targeting in the first, 5-6 years of mine life. And then there's a 2% royalty on the Martha vein, which is the larger flat-lying vein that Coeur was targeting as part of their open pit. So we bought both of those back, as well as there is a future reserve discovery payment that any mineral reserves we discovered outside the current resource, we would have to pay the holder 50 cents or 25 cents per ounce. So we bought that back as well. That was all part of it. So that was 13.25 million for all 3 of those, which we think was a very good use of our cash and a good deal for shareholders. And then the additional 8.75 million that was contingent, we basically crystallized that. I mean, knowing that obviously we're going to have to pay that in about a year and a half anyways. We just made that a 12-month promissory note to the royalty holder, which was to Terra. And so total was 22 million, but really in our minds, we bought the royalties back for 13.25.
So how will this impact the cash cost of La Preciosa?
La Preciosa, so this will obviously lower our costs per ounce per ton on the all-in side, as well as just the regular cash costs. You're taking out, even blended over the life of mine, it's about a 1.75% royalty off the table. That's straight into shareholders' pockets. So we're really excited to do that and be able to ensure that all the upside is coming back to everyone involved in the project.
Could you give some sense? I mean, some sense of if you paid a fair price for the royalty. I mean, what's the minimum silver price for this to make sense? And I mean, you have done sensitivity calculations.
We did a lot of sensitivity work on this, and obviously, we made sure we had another group check over our work and help us with that, with advising on that. And so we know, based on our current mine plan, without long-term expansion or anything, we think anything below 30 for sure is, it still makes sense. Once you get down to $20 silver or something or under there, it's maybe a little grayer, but then that's when you need the expansion. But at our current mill setup and throughput, it made sense at much lower metal prices than where we are today.
And I guess you, when you use discount rates, you didn't use a 5%.
We did it. Well, again, we did a whole bunch of scenarios. So we did some with heavier discounts. We did some at 5, just different areas of the mine, really. And depending on what we're going to develop. And, we ran a whole bunch of scenarios that, with metal price changes, discount rates, additional capex for mill expansion, just to make sure kind of in every significant scenario that we think is quite possible, that it made sense for us, and that was a good use of capital.
You're still in probably the strongest financial position you've ever been in, or at least been for a very, very long time in. How will you allocate capital, especially from the first half of next year when La Preciosa really starts generating you free cash flow, and you're already built up a quite good treasury? How will you allocate that?
It's just exploration, development, expansion opportunities. So our team is already looking at how we can expand the underground mine at La Preciosa. So we have one ramp and one portal going in. We didn't want to upset the permitting process because that started before the rally. So we thought, let's get the mine going, and then we can amend. We can amend the permit. We can then add more areas to go extract more material. And this is what we're planning and looking at now. I don't have that plan in hand. We're just in the early stages of that. So next year we'll have a better idea of what we can do to expand the operation beyond what we've told everyone. We said that we wanted to be a 7, 8, 9 million ounce a year producer within 5 years. We put together that plan prior to the rally. So now we have more capital. Now we can think bigger. So what do you got to do? You got to drill, baby, drill. That's what we're doing. And we're doing it orderly, and we're being disciplined. We're not over-promising. We're taking our time and doing it methodically.
Could you summarize then the catalyst for Avino for the coming 12 months?
Well, potential more index inclusion, drill results. There's going to be a lot of that. Earnings. These are the main things. We've got, I think, an analyst tour in October. A bunch of analysts are heading down to look at various mines, so we're on that list. So the audience is growing, and really, you ask your subscribers or your audience, what do they think silver is going to do? If you think that it's a valuable commodity, then the leverage to that are owning the equities, and we've got a lot of ounces, so we've got a lot of leverage. Every portfolio should have a silver lining in it. So we got a lot of silver, a lot of leverage, and there's fewer companies out there with Gatos, Silvercrest, Mag being taken out. The spotlight is narrowing, and there's not a lot of pure silver plays out there, and we're one of them.
Where do you envision Avino silver and gold mines at the end of next year, given that?
Wow. Well, if we're able to get the 30 to 40% growth in the output, look at the market cap, 30 to 40%. So $1 billion US would not be out of line.